Crypto's not just surviving, it's thriving. That's pretty much how I'm seeing the markets at the moment. My name's Pav, lead market analyst at Swyftx, and it's been a pretty eventful couple of months. I mean, we've only just really cracked into 2024. Lots of expectations that, yes, we were in for a bull run. We're going to see all-time highs on crypto. But I don't think anyone really anticipated us to get here this soon. I guess the mainstay of the opinion was a bit later in this year. Obviously, we would go higher. Bull runs classically, you do sort of cross a certain threshold. You're in for about a 1 to 2 year gig of prices moving and appreciating at a steady then accelerated pace. But I mean, I guess the ETFs have really, in my opinion, been what's throwing these massive tailwinds behind the markets, and that's what we'll sort of drive into as well. And while it might be getting a bit boring and old hearing about the ETFs, I think they're the leading indicator at the moment for why the markets are responding in the way that they are. And I'm seeing that personally, quite honestly, just on the charts. So leading into the London sessions of trading, which is just before the New York sessions, we're seeing quite a bit of positive sentiment in terms of like buying, accumulation, even longs overextending before the New York sessions, and that's purely just off the back, pretty soon after the BlackRock data lands on how the flows landed for the day. And I mean, what we just saw the day before recording today, massive liquidation event just as we tag that all-time high, and that kind of is a showcase of really that sort of trying to price in what the US session's going to do, and sort of just expecting higher prices. It's pretty hallmark of that, I think, and it kind of tells that story of everyone's chasing in anticipation that New York session is going to be gangbusters, because the ETFs have been net buyers for so long right now. So I'll dive into that and sort of unpack that a bit further. But then also we'll just go through the macroeconomic calendar, what to watch out for this week. It's kind of a big deal week, not really. So far it seems like the ETFs are running the narrative in the crypto space at least. And then we'll also dive into some altcoin analysis as well, which is always good to do. So without further ado, so this is a chart just to quickly show what we saw last night, that mass liquidation event. So on the 5th of March, basically $892 million worth of longs liquidated on derivative markets and $291 million worth of shorts. So huge washout. Just quite simply put, when people are betting too much on one side of the seesaw, so you can either bet on the market going up, going down, there's a sort of mechanism in the market that's built in to try and bring it back to a point of balance. And you might have seen me sort of share this before, but the funding rate maps. So these are essentially like the interest rates that are applied to positions that are open right now in market. And you can see here this sort of hot zone basically describes when the market's getting too frothy. In a bull market, it's a bit harder to sort of judge these funding rates, to be honest. Like it can go sustained periods where you see high rates just because there is sufficient spot buying to keep the price elevated. But if I sort of zoom out to the last 6 months, January, when we saw that massive correction, there was a massive, huge period where we were frothy before a correction, and we just saw that again last night. So I would sort of say get into the habit of expecting pullbacks like this, and have a strategy for you that works, that is ready and prepared to see these liquidation events, because I dare say this is just the first of many for the next couple of months, if not a couple of years, 1 to 2 years if we're lucky. But yeah, this is hallmark for me, just to see that those longs are wiped out. We continue to see the strong buying into the ETF. So this is the overnight results being here in Australia. We had this landed this afternoon. $788 million US worth of Bitcoin purchased by the BlackRock product. That's the largest day we've had so far. Other top performers that we saw from the previous day, Fidelity didn't quite mirror what it had done yesterday, but BlackRock alone has sort of dragged it over the line, and we've got a bigger day than what we had yesterday, or the day before, I should say, the 4th of March. So coming into the London session, we probably want to start to see adequate buying and higher highs, higher lows, just really, active market structure in that way to sort of anticipate that, cool, we might have a crack again at the all-time high. And that's pretty much what we've seen today, to be honest. Like, there was that washout, like I mentioned, after the US session, which is here. Got the Asian session, which is about here, our time about 8 to midday, so that's around that region there. And then London was starting to see it sort of expand quite nicely as well. So I would be expecting this is the night, to be honest, all-time highs, for there to be a decent crack at it. The only thing that I would say technically stopping us is if we can't get over this high here, then I'd probably guess that we rally down, probably form some sort of pattern like this, and just try again another day in the near future. So that's kind of my thoughts there. The other sort of contributing factors right now as to why the crypto markets are running so well, US dollar index showing some weakness. So I talked about this quite a bit in the last couple of weeks. It's only been in this particular week in specifically that we've seen this level fail. So we talked about there could be the chance of this bounce occurring here, where we do see higher prices on the US dollar, and naturally speaking, when this does increase, the buying power increases for the US dollar. So things like crypto are weighted down. They're sort of shackled to go a lot higher, a lot easier. But what we're seeing here is just consecutive red days or black candles, as I've got it sort of drawn up here. But yeah, for me, this is great to see. I mean, this is exactly what we wanted. If we wanted to see an altcoin rally, we want to see this start to continue to sort of fade down and start to break down and make new lows. This is where you're going to see other currencies like the euro, the British pound, Aussie dollar, Japanese yen also probably start to find strength as well, generally speaking. US dollar, getting weaker is just a good sign overall for anything else, just because it has been so strong lately. It's been a multi-month rally all through the crypto bear market, right? So this is a natural unwinding that we wanted to see, and it will be accelerated by things like interest rate drops. So the one thing that people may not be expecting is maybe a interest rate drop sooner. And I dare say once you see a key level break here, you might see some macro news that sort of reflects that as well. But that being said, looking at the macroeconomic calendar for this week, really the big one to point out is Fed Chair Jerome Powell testifying in front of a Senate committee just on, I guess, their visions of the economic policy and how it's shifting and moving and what they sort of are benchmarking the country is performing economically. There was a drop in GDP last week, so it might sort of start a very interesting conversation around, especially with the also the rise of talk of the local banks there, the regional banks being in potentially some sort of hot water too, just their share prices falling quite considerably. Will we start to see bailouts or at least some sort of form of stimulus or some sort of easing potentially through an earlier than expected rate cut? I don't really know. No one really knows this until it happens, but I think these will be pretty interesting, only because it could offer some sort of I guess, positive tailwind to crypto markets that we didn't expect, because anything that's to do with positive sentiment in terms of on-risk markets, crypto's going to benefit, even if this isn't directly crypto related. Another big one really this week is this bad boy down here, unemployment rates. Again, that unemployment rate sort of figure speaks quite strongly to when interest rates will drop as well. That's a key sort of metric the Fed is watching as well. But otherwise, other things I wanted to touch on today, Total 3, we've been tracking this the last couple of vids. We had that massive week. We sort of recorded showing this week kind of building up, but it really just expanded and exploded toward the ends of last week. And we've seen the Memecoin sector really, really thrive and probably drive a lot of that price appreciation, to be honest. I mean, when you take a look at just the top gainers for the week, you've got Shiba Inu, Floki, Doge with Hat, Pepe, Bonk. That's literally your top 5 lineup. When you're looking at I think this is like the top 250 assets. Yeah, this is, we're back, baby. I don't really know what else to say other than that. But other notable runners are eCash and Fetch AI. I know Fetch AI, we've been talking about the AI narrative as well a bit lately. But yeah, Theta Network is an interesting one too. It's a previous cycle coin, but they're starting to shift towards a similar model that Render uses, lending network power to help, potentiate AI usability. So that's an interesting one as well. But look, we can't really get away from the whole meme fest at the moment. And there's nothing wrong with that. This is pretty hallmark for when Bitcoin does start to approach key levels. We start to see these assets really start to take off. Like if I could show a Doge chart over the years, I probably should have prepared one, to be honest, instead of doing this on the fly. If we overlay the halvings, if I can spell, Bitcoin halving events. I think this one should work. Oh, that's a terrible color. That doesn't go back far enough. Let's use this one. Cool. So it's been pretty close around or after the halvings that we've really started to see price appreciation of something like Dogecoin to Memecoin, and then a sort of massive pump a few months afterwards, I guess. So that, from the third halving till that big move was about 224 days. This big move to here, 254 days. So look, we've got the halving coming up around, let's just draw it there. So, 200 days after that, what's that bring us to? End of this year. We might start to see moves similar to this if history repeats itself. But there's nothing to say that the world right now is in a whole different state. We've been in a regime of money tightening. And if that starts to let loose a bit sooner, it's election year as well this year, we might see this potentially front run and just run a bit sooner. But I would sort of look towards the higher cap meme coins to say if there's going to be continuation of the lower cap meme coins, which have been performing quite well, quite notably the likes of Bonk and Whiff, Dog with Hat. Everyone loves that. But yeah, this is something I'm watching quite closely, because it is usually pretty close to when the rest of the market starts to break up and run as well. So, if we look at something like ETH in relation to the halving events, it's bang on in terms of like pretty soon or shortly after. There may be some sort of short-term correction, but there has been historically the start of alt season. So that's what we have to look forward to be honest. But yeah, I mean, these charts are still looking so strong. Even for Ethereum, something like this, that's kind of like your next key level, just the left shoulder from where we broke down. Probably sharpen that up a little bit on a weekly. And quite notably, even if we draw a fib from the top of the cycle to the low, let's just jump in on a lower time frame on a daily. We still got potentially one more price target left here. So yeah, we've got that confluence of that left shoulder on a macro scale, as well as 4,014, depending on what exchange you're looking at. That's the next key fib level. So I wouldn't be surprised if we see some sort of reaction here. Don't know what we'd see. We could just see that. But I'd be also expecting to see maybe some sort of distribution to go back low and just reset before it starts to go and push again and we start to put in price discovery. We've got that to look forward to as well. But yeah, I mean, for Bitcoin, just to do some sort of bullish and bearish scenarios, I mean, it's really hard to be bearish right now. Price and sort of technical analysis is kind of taking a back seat to fundamentals right now with all the ETF buying. But on that same topic, I've said it again and again, but if we start to see these flows not be so positive, that's not going to be great. That's my first sign that the markets could be showing some sort of form of profit taking. The phases of accumulation that we're so used to might start to turn into distribution. But for now, there's not really a lot telling me here that we're getting bearish. I would be looking for these prior lows to get lost by Bitcoin, but we bounced perfectly off of them and closed above on a 4-hourly time frame here. Ideally, we start to see price just sort of compress and maybe move higher again. But yeah, if we were going to get bearish, this would be the perfect spot for it to start to turn around and potentially start to lose some key levels as well. Just a very obvious one. If we start losing key Fibonacci levels too, that's another thing you can look out for. But again, this market structure move here doesn't really tell me a sign of weakness just yet in the way that I read the markets. But I mean, just got to be careful watching both, I guess, scenarios at the moment. It does seem like a period where the risk is a little bit higher than what it was, I guess, a few days ago. Just, at the end of February here, this movie was a little bit more easier to sort of get on board with, potentially. But we could be seeing this slowing down now, potentially. We'll see what the ETF flows do tonight, or it could be higher again. And I mean, even news stories like this, Jim Cramer, ultimate person to be fading. We've seen time and time again. Just recently tweeting with this dip, "Hi, my name is Pip. I bought Bitcoin at 69,210, and I am counting on Michael Saylor to stop me out." And a little picture of his dog Pip. So things like this usually means we keep going higher, even though fear and greed is getting right up there. It's probably getting a little bit asymmetrical, the risk versus reward. Now it's moving more towards a risk end potentially. Other insights we can look at are things like liquidation heat maps. So this is like where our orders resting that, often act as magnets for price as well. We're seeing a good cluster below price. You'll notice that with something like this, we, on a weekly time frame, took out a massive cluster that was sitting below price. And usually when you wipe out longs like this or shorts, it signifies a potential area for reversals. It offers a great pocket of liquidity for anyone that was wanting to get long. That was basically BlackRock buying everyone's spot. And before it potentially moves to the other side. I mean, on a high time frame, not seeing any big magnets. There's potentially a cluster above highs as well. But I guess what I'm showing here on a lower time frame on the 24-hour, we could see move lower before going higher, or we could just continue to go higher too. So there's just something, it's not really too telling at the moment in terms of things that I normally look at. But other than that, I don't think there's too much else to cover other than some altcoin analysis. So I know there were some requests last week, which I probably should have been a bit more prepared with, but we had COTI requested in the channel. So let's have a look at COTI. So usually with something like this, I'm starting on a monthly time frame and working down. So I'll go from the cycle high to what is now known as the cycle low. Map that out. Looks like we've just crossed the 236, and depending on how this is looking on a daily, yeah, okay, so we could be hopefully tomorrow closing above this. That could signify that we've reclaimed this level, and I would probably just use something like range analysis on something like a 12-hour range. Yep, like just like this. So I'm going to map from this high to this next subsequent low. Yeah, I'd really want to see this fall back inside this range to have any form of confidence. And if I was getting real picky, which I will, I'd probably want to see some shift in market structure too. So I'd want to see highs above that and ideally highs above here as well. So the ideal structure for me here would be something like this. Just something to see it come out. And then you'd basically just see a big triangle here as well. So just a breakout of this sort of range here would show accumulation. But if we reject here, we continue lower. I mean, your next area that you're looking here is probably previous highs before we broke higher. So what's that? 11,014. So yeah, that's another spot to keep an eye on. Other ones we can look at are Sol. Just know that's a good one to watch as always. From last week's TA that we did get that breakout, and overnight we got that retest. That is just filthy, isn't it? But it was a pretty clean period of accumulation there. But again, this is a good example of what I am concerned about. If I just draw my ranges like this. We did go higher, we did go lower, back in this range, teetering around this midpoint. You may or may not have heard me talk about midpoints before as like being the ultimate decision point once you have taken out two range extremes. So here's where you're waiting to see what's the market going to do. I wouldn't be even trying to guess what's coming next. Like that, you want to see either accumulation, something like that, or you're going to see alternately distribution. So something like what we just fell to go higher here and it just breaks down further and we start to go down lower. So we're really just stuck in the middle of no man's land, just pending what's the sentiment of the market going to be right now. That would be my takeaway right now. Another one we had was Sui. Very good request. I've been following this one since 2023. It's been absolutely going gangbusters, but this is an old chart. I'll just go from fresh. So we're pretty close to all-time highs if you're looking at the Binance charts at least. So going from top to bottom, yeah, bouncing nicely off the 618 here. Want to probably see some decent accumulation here on lower time frames to get excited. So let's see what we got. Actually, I'm just going to look at monthly levels to begin with too. Yeah, so monthly, if I'm going to have to be picky again, like we did close above the previous month's high there, so I would assume continuation. So that doesn't look too terrible. Weekly, yeah, weekly doesn't look too great. So here's a sweep where we've gone higher and closed back below, and then we've also closed again under that open. So yeah, I'd be looking for continuation on a weekly time frame at least to this cluster here, which technically we did get. Let's go the whole body. That's and wick. That's probably going to be a better way to view it. Yeah, so we've hit that midpoint, we've saved, we've retained the fib level. So far, it's kind of okay. I still feel like it's catching a falling knife at this stage, if I'm honest. So we jump down to the 4 hour, which is like our next key time frame. Yep, pretty similar to COTI. Like I'd want to see highs above here. I might make that a different color. I'd want to get well above that. And then also probably well above these highs as well, which is like the next range highs as well. So I think right now you're taking on a fair bit of risk getting in. But I mean, these levels are holding this mid-range save, so I quite like that. We could easily just buckle up and go up here. And then I'd expect tomorrow to come back down, do some sort of accumulation to then go higher above, and then boom, like you could start to get explosive after that. I think once you get so close to some of these coins that have all-time highs pegged in quite close, and then new narrative assets, speaking from previous cycles, these are kind of the best ones that usually provide the best sort of beta plays, like volatility plays. Once they do start to break, they just go because they're in price discovery. And they're growing networks. They haven't got as much, I guess, tokens out there in the world. This one being a layer 1, but some of the layer 2 coins specifically, they've been around for 1 or 2 cycles. The supply is quite diluted. The price may not hit as well as you'd expect. But something like this, really gets me interested. This is Sui. I just realized I did the wrong one. That's what a bad night's sleep will do to you. Sorry, that's still a good looking chart if it can reclaim those levels. But we will do say, classic. All right, so let's look at say on a monthly. Yeah, I knew when I said it hadn't broken all-time highs, I was wrong from the get-go. But Sui does look good for that same reason, that it hasn't broken all-time highs just yet. All right, so let's look at the weekly here. I mean, this is a trend that's intact in terms of the way that I look at the markets. We've got a bullish market structure break there, an unmitigated high up the top there. So for me, I'm looking for reasons for continuation on looking at a weekly. So let's jump on a daily. So we can use something like a retracement fib here, going from the bottom to top instead, where we take the absolute low before we broke this high, which is down here. Smack that to the high that we have available. So just to be clear, that looks terrible. This was the high that we had a market structure break higher, and this was the lowest low between that break and that high. So that's why I'm using these levels, just in case you're wondering. So if we were bullish here, I would want to see, these are the kind of levels where you'd want to see bounces, the 786 and the 0618. Otherwise, you're potentially looking at coming back here, taking this low out and maybe going higher, or you get rejection and we're going lower. So I still think there's a bit to wait and see what happens with this one. But if I am bullish on this one and I'm wanting to see a bounce here, I want to see the same thing I outlined in the Sui chart, which is a decisive close above the previous high before we break down. And that has no color. What am I doing wrong? Wrong tool. I want to see a high above there. And then once we have a high above there, I'd love to see just accumulation. So another dip that gets bought up, very simply put. That's all I'd be looking for. Super simple, not to buy here, but just to wait to see it. See a new higher high get created here, and then I would personally look to get in just after seeing that, or just wait for a pullback, and that would be the buy the pullback scenario. So that would be my ideal scenario for something like say. I'll finish up with ETH because I don't think I covered it too closely. Oh yes, I did. I said about $4,000 seems like a logical point. And I mean, just to sort of add some more color to where the altcoin market is right now, like this is the Turtle 3 chart that I think I mentioned earlier in the show. It's still not looking weak. Let's jump on a weekly. Yeah, I mean, if we close next Monday under here, which is a total market cap of 664 billion, I'll be concerned. Not in a major way, but we just might see a pullback, very similar to what we saw here, where we just failed to go higher, and we could see, 16%? I mean, 16, 17% just takes us back to where we just saw the market go, probably last night, to be honest. Yeah, so I think we've already seen that wipeout. See, so I'm not, it's so hard to call right now. Like, I'm not super convinced that we go lower. I'd like to take a more bias approach that we go higher, just looking at market conditions, where we are, the fact that Bitcoin's just teetering on breaking, and we know that when Bitcoin does break, altcoins generally tend to follow shortly after. But I'm just cautiously optimistic right now. I'm just probably not really going to look at things too much until we see some movements and some confirmation. But that's it for me. This was a insightful episode. I mean, I've sort of outlined why I think, yeah, we're not just surviving. Like, there is an idea that we're likely going to thrive in these current conditions if things just behave. And then next week we'll sort of touch back to how things are looking. You know, if things are shaping up with the bearish close, I might do a episode earlier in the week just to sort of, I guess, frame the situation for everyone for how I'm seeing things. But, you know, if you're wanting to see more insights, you can follow me on Twitter. You know, like and subscribe, share this video if you found it helpful. I'm trying to grow this channel, hopefully provide some value. But if there's anything you want to see more of, or you want explained a bit deeper, just let me know in the comments below. But see you guys next time. Cheers.